Hello, everyone, and welcome to our training today. Today, we're talking about equity crowdfunding, one of the coolest, newest, unique ways to be able to get money for your business. No, this is not crowdfunding. This is equity crowdfunding. It's a new way to actually get venture capitalists, to get angel investors and others, to private individuals to invest into your business. We're going to decode the whole thing today. By the end of this training, you're going to know what equity crowdfunding is. You're going to know how it works. And you're also going to know exactly how you can tap into this funding vehicle to be able to get money for your business. Even you can't qualify for financing at a lot of other funding sources, including conventional banks and even fintech lenders. So for those that don't know me, my name is Ty Crandall. I'm the CEO at CreditSuite, and this is what we do at CreditSuite. We help you get capital, help you get money. And we do it by helping you improve your business credit or build business credit for your EIN that's not linked to your social, improve your fundability, and access all types of loans, credit lines, and other kind of funding in one place. So let's dive in. So crowdfunding is a way, of course, to get funds from a lot of different people, right? Versus one or two investors. You can raise cash through the sale of basically securities like equity, debt, revenue share, and more. So we're familiar with crowdfunding platforms, but we're familiar with platforms like Kickstarter, where Kickstarter, for example, is a way that you can actually raise money from a crowd. So if we look at normal crowdfunding, then we look at a place like Indiegogo, we look at a place like Kickstarter, and what we find here is that these platforms basically have a place where people that want to get money are put together with backers that have money and they're able to get money. That's what crowdfunding is. But equity crowdfunding is a whole new interesting take on crowdfunding. And it basically allows you to exchange equity in your business for money, the same as you would with venture capital, the same as you would with angel investors. But the way that it works with equity crowdfunding is that you're actually coming together on one platform and you're using that platform to exchange equity or ownership interest in your business to be able to get the money you need. That way, you're not actually typically taking on debt. You're not taking on loans. You're not taking on credit lines. So before I go too much into this, let me kind of explain both of those. There's basically two ways to get money for a business. You can get money from what's called debt financing. You take on debt. That's how you get the money. You take on a loan. You take on a credit line. You take on a credit card. You're taking on debt, and then it has to be paid back. That's how you get your money. Then there's also equity financing. And equity financing, you're not typically taking on any debt. It's not debt that has to be paid back like a loan does. It's actually financing, or it's actually money that ends up getting paid back because you sell the business, okay, or you go public. Basically, you're exchanging equity or ownership interest in the business to be able to get your money. So two clear differences that you have to get money for a business, whether it be equity financing or debt financing. Now, equity crowdfunding is a stock offering from a company that's not listed on the stock exchange. This is why it's so cool, right? And so it used to be in the past that if we wanted to get all these investors to invest in our business, then what we had to do is we had to have a publicly traded company on the stock exchange. And to become a publicly traded company, there's a lot of costs, there's a lot of work, there's a lot of time involved, there's a lot of things that a lot of small businesses just don't have. Now, a lot of things have changed to bring equity crowdfunding into our space. And this allows us to go, even a startup business, to be able to actually be able to do the same thing that big publicly traded companies do in the stock market. Get money from a lot of different individuals. Basically sell some stock to other individuals that are interested in buying and therefore get the money that we need. So equity crowdfunding has been around for less than 10 years, and it's not the same as rewards-based like Kickstarter, right? We kind of explain the differences here. Whereas Kickstarter, places like that, you're not typically exchanging equity in your business for money. This is really used as a vehicle to actually bring private investors into your company to invest in you. Facebook user says, hello, Ty. Your name's not there, but I'll refer to you as Facebook user. Thanks for coming in. So the major difference is what investors get for their investment. With reward-based crowdfunding, like Kickstarter, that's what they call it, reward-based crowdfunding, investors receive some kind of incentive for their donation. That incentive is not equity in the company. With equity crowdfunding, the investor actually receives equity ownership. So the person actually has some kind of stock, some kind of equity in the business. Whereas with crowdfunding that's reward-based, that doesn't happen. As a matter of fact, a lot of reward-based crowdfunding platforms like Kickstarter or Indiegogo won't even allow you to exchange equity ownership in your business as a reward for people that invest in your business. So it's a great way to get a share in your company. It's a great way to kind of sell stock in your company and get the reward of a financial cash injection in your company. You could get 10 grand, you could get 100 grand, you could get $1 million because you're basically raising money from individuals that want to invest in your business and get some kind of rate of return. So I'm gonna give you an example. CreditSuite's taken off. We've grown really quickly, right? We've been on the Inc. 5000 the last 2 years, the only 2 years we've applied to be on. So a lot of outside people might want to come in and invest in CreditSuite. So eventually when we sell one day, they get some kind of rate of return. But we don't want to go public. We don't want to be on the stock exchange. So equity crowdfunding will allow us a way to actually bring in outside investors to invest into our company without actually having to go through the process of an IPO or becoming a publicly traded company. Now, use that example from our standpoint, but anybody can do the same thing. That's how equity crowdfunding works. And Chili says hello from Facebook. Thanks for tuning in. So also, as a general rule, equity-based crowdfunding brings in larger amounts of money. It's because it draws a different kind of investor completely. So look, if I'm going to Kickstarter and I'm just kind of chilling and checking out projects, then you know what? I might invest in things because I think that they are cool. Hold on for 1 second. I have a 20-pound Pomsky that's freaking out because she's not in my office. And now I let her in, so all should be good. Okay, so when we look at this, we look at people with Kickstarter, Indiegogo. They may just have an interest in something cool, right? They may invest in something and give $5, $10, $15, $20. They want to help somebody out. They think something is cool. But equity crowdfunding is way different. This is now being used as a way for venture capitalists, for angel investors, for all these high-level investors to now make it easier for them to invest in businesses. So it used to be they had to go through this big process to get companies that they wanted to invest in, and people that wanted angel investors and venture capitalists to invest in them had to go through this big process to be able to get matched up with potential investors. As a matter of fact, I read a great book on angel investing. And the first piece of advice was to move to Silicon Valley. Well, I'm not moving to Silicon Valley. I love Tampa Bay. My kids love it here, right? So that's the problem. We had to go through all these hoops. We had to go through all these hurdles to be able to get access to investors that wanted to invest in our company before. Now, equity crowdfunding has made it easy for investors and easy for small businesses to be able to find each other. And it brings in a higher level investor, somebody that has a lot more money to invest. Okay, so why doesn't everybody choose that? Well, the key is some businesses are better suited for equity-based crowdfunding than others. Okay, some people don't want to exchange equity in their business for money. Some people don't want to sell stock in their business for money. Some people would prefer debt financing. They prefer to take a loan or a credit line that has to be paid back versus selling actual stock in their business. Now, potential investors visit a funding portal website, and we'll talk about some of those today. And there they can explore different equity crowdfunding investment opportunities. Note there are limits on how much capital an individual can invest based on their income and net worth. This is the way that it works, okay? And we call this an accredited investor. There are non-accredited investors and there are accredited investors. Okay, and when we talk about accredited investors, there's usually net worth or income requirements that somebody must meet in order to be an actual accredited investor. We'll talk about that a little bit later. Plus, investors must be 18 or older to be able to invest. Now, with a platform like Kickstarter, which we call the kind of the rewards-based crowdfunding, well, businesses make money by pre-selling their products, but with equity crowdfunding, and that's how they oftentimes work, right? If I want to roll out a new product on Kickstarter, then I'm basically rolling it out. You're giving me money, and I'm using that money to typically produce the product. And by investing on Kickstarter, well, you're going to get the product that you're actually investing into. That's how that works. Okay. But when we talk about equity crowdfunding, what happens is that now you're not using the platform like Kickstarter to be able to pre-sell your products. Instead, you're coming in and you're selling securities. You're basically selling stock in your business. Okay. You're basically selling equity in your business to be able to get the money exchanged. You're not actually selling the product to the people that are investing. So, or in the form of debt, revenue share, control. Again, there's many ways that these platforms work, but equity crowdfunding gives investors a stake in your business. That's what it comes down to. You're exchanging equity in your business for money versus taking on debt to be able to get that money. Okay, and no new friends. Poor guy says, yo, on YouTube. Thanks for coming in. And Shirley says, good topic. I think so too, but a lot of people aren't familiar with this, which is why I think it's important to dive in. So they stand to make a profit if they make a good investment. That's the way private investors work, right? The way that angel investors, the way that venture capitalists work, which is what these guys are, is that basically they are banking on you and your idea and your concept to be able to make it big. So if we look at, for example, at the people that invest on Shark Tank, the investors there, right? They're not getting their money because you're paying them back through a loan. Typically, sometimes they give loans and credit lines that got to be paid back, but typically they're making their money if you sell, if you go public, if your business takes off like a rocket, then that's how they make their money. So these investors are high risk, high reward, which means they look for high risk opportunities. Unlike any kind of lending institution, all lending institutions care about risk and minimizing that risk. But with this, it's exactly the opposite. The investors are literally looking for high risk opportunities because high risk equals high reward. So this is the opposite. It's way easier to get money for risky endeavors this way, almost impossible through financial institutions. One of the many benefits that equity crowdfunding provides. And the company they invested in grows. That's what they're looking for. So here the business can create hundreds of brand ambassadors who want to see you succeed. People that have a lot of money and a lot of influence are backing you, and therefore they really want to see you succeed. If somebody puts in $100,000 or $1 million in your business, you better freaking believe they want you to succeed. So they're going to do everything in their power to help you succeed, including introducing you to people in your network and basically sharing what you're doing to their network to be able to get it more attention. So they're an audience the company can depend on to spread the word about their business and share the product with their own networks. Again, they have a financial stake now in your business. So they have a really big, they have a very big personal interest of seeing your business actually succeed. Now, Vin Jeffries here from YouTube says, I only want loan, no equity to fund my deals. Is that doable? Yes, you can. But remember, with loans and equity, the difference is there's a complete difference between the two. If you want debt financing, a loan, a credit line, a credit card, you have to qualify, right? You have to have personal and credit scores that are high enough, or cash flow that high to qualify, or revenue to qualify, or collateral to qualify. And I do a lot of training on all different kind of ways you can use and get debt financing. But remember, with equity financing, you could get this even if you can't qualify for any other kind of financing out there. And with this kind of financing, you could typically raise hundreds of thousands, if not millions, versus debt financing, where it's typically not very practical unless you have a very well-established business. And Chili says, Shark Tank light, yes. And says, yes, high risk, high reward. That's exactly how private investors work. So the entrepreneur raises capital, has a total control of the offering, including what to sell, how much, what price. So if you're going to sell stock, you determine if you want to sell a total of 5% of the value of your stock or 10% of the value of your stock and how much that stock is going to be worth. Okay, you can set the terms, including the valuation and how much capital you hope to raise. It's all set by you, not the actual platform or not the actual investors. So companies can set a minimum funding goal alongside their desired maximum, the minimum that you'll take before you'll open it up and actually take the investor's money, and a maximum that you want to raise. So if you don't fully reach the funding goal, well, you can still successfully raise capital. Okay, and those who want to invest can do so even if the market interest isn't enough to reach the goal. So having this kind of flexible option allows you to still take the money if you don't reach your goal, or not take the money if you don't reach the goal, minimum or maximum. So it gives you flexibility in how you set up your actual campaign to raise money. So a business using equity crowdfunding doesn't have to issue an IPO. The business doesn't have to become a fully reporting public company, which is financially burdensome for most small businesses. Okay, and I look at this, and for example, we've got companies and we've got people in our circle that are approaching us about going IPO, about going public. But the reality is, as I said, the minute that happens, I have to step down from my position, and I love what I do. And the reason I have to step down from my position is that I'm an entrepreneur. I'm a rebel. I like to do whatever I want to do, right? I started my business so I can do it my way, right? I don't like to be told what to do by other people. So like working under the SEC will never work for me, right? Like I don't have that much discipline to be able to meet their guidelines and follow all their rules. I'm a rule breaker, not a rule follower. It's why I'm an entrepreneur. It's why a lot of us are entrepreneurs. So again, this is some of the burden that you have when you do file public or go IPO, but not things that you have to worry about if you're using equity crowdfunding. So investors don't have to be accredited. We talk about this. An accredited investor meets a certain net worth requirement. They have a certain income requirement, like $1 million net worth or $250,000 annual revenue. That's what you have to meet to get to be an accredited investor. But what's nice about equity crowdfunding is that you're able to come in here and get unaccredited investors. So what happens is, like, you've got this small smidgen of people here, this little point of people that are accredited investors. Then you have all of these investors that are non-accredited. Well, equity crowdfunding allows you to bring in all of them, these little group that's accredited and this massive group that's unaccredited. And that's not something that can be done if you're filing an IPO. Typically in those situations, you have to have only accredited investors. So this attracts a lot more investors. A lot higher volume of investors can get into this because they don't need to be accredited like you do when you're dealing with IPOs and public offerings. So a business can raise funds without having to turn to venture capitalists, without having to turn to angel investors either. So let's talk about some platforms here that could work. And Chili says Elon Musk had fun with the SEC. Yeah, Elon Musk is exactly why I could never work as an IPO or a publicly traded company. And for the record, the trouble he got into was because he was sick and tired of it as well. Okay, he was out there tweeting about wanting to go private because he didn't like dealing with the regulation headaches and the burden of it either. And that's what got him into trouble. So again, great point, Chili, because what happens is that this is why we see so many CEOs get in trouble, right? Uber CEO. We see, Elon's in trouble all the time with Tesla and SpaceX. And the reason is because most of us that found companies, we have a rebellious side. We don't like to be told what to do. We like to do things our way. We think that we have a better path forward than what already exists in the marketplace. That's what makes us entrepreneurs. But it's also the reason that many founders are not the ones that take their company to $100 million plus valuations. Because the reality is founders and that rebellious side of us will get us so far before we really have to start acting appropriately. Because whether we like it or not, at some point, when you start to get to 8 to 9 figures, you have accountants, you have attorneys, you have a lot of people that have oversight over what you're doing because there's so much to risk by you messing it up. So great point. Again, the reason a lot of us may never go public is because we just can't deal with that burden and that regulation headaches. This is a way around that. So Crowdfunder is an equity crowdfunding platform. With Crowdfunder, investors purchase equity in promising companies. They consider campaigns to be deals, and as donors or investors, you can get started with listings for $2.99 a month. Premium listings are $4.99 a month. And in their community, there are over 130,000 entrepreneurs and investors. You can find them at crowdfunder.com. Don't forget, what's beautiful about equity crowdfunding is it used to be that if you want venture capital, if you want angel investors, you have to go hunt them down one at a time. And like I mentioned earlier, one of the best books I've ever read on angel investing, the number one thing they said to do was to move to Silicon Valley. Not practical for a lot of us that are happy where we live. This is simple. You're spending the money and you're going to a place that has 130,000 entrepreneurs and investors. All the investors are already there. And if they like your company, they like your campaign, they like your deal, then you have a really good chance of getting the investors you need without all the headaches that used to be associated with getting money from angel investors and venture capitalists. Now, Crowdfunder does not work with every industry. These are prohibited industries they don't work with: guns, firearms, tobacco, cigarettes, cannabis, pyramid marketing, adult products and entertainment, gambling, contest raffles, illegal subscription drugs. These are on their prohibited list. They won't help you if you're in these industries. Fundable. Fundable is a crowdfunding for a business platform. It allows companies to raise funds. Those funds come from investors, customers, and friends. They have over 80 million in funding commitments. Let's talk about this. So whenever you file to go public or you're using crowdfunding, you have a big stake in this as well. These platforms like Fundable give you the platform to raise the money you need, even if it's from people in your circle. If you've ever heard me talk about and teach angel investing, there's two kinds of angels. There's affiliated angels, people that you know and know you, and unaffiliated angels, people you don't. So far, we've talked a lot about unaffiliated angels. We've talked about a lot of investors who may want to invest in your company. But never forget, there's a lot of people in your circle that also might want to invest. So if CreditSuite wants to go raise money through equity crowdfunding, you better believe we're going to announce that on our social media pages. We're going to email our database about that. We're going to let our tribe know, because our tribe are some of the most likely people to invest in the actual business. The people that know us, the people that like us, the people that trust us, the people that follow what we're doing and appreciate and like what we're doing, those might be ones that give us millions of dollars through the equity crowdfunding campaign. So don't just rely on a platform like Fundable to link you to unaffiliated investors that don't know you. Remember, there's a lot of people in your tribe, family members, friends, followers, subscribers, fans of you or your business, people that are with customers, people that are potential prospects. All of them may want to invest as well. These platforms give you a campaign to push those people to, so they can have the confidence that they're investing in something through a formal structure. And you're able to tap into affiliated and unaffiliated investors. So Fundable charges $179 per month to raise funds. Fees on rewards are 3.5% is what they're going to charge on what you get, plus 30 cents per merchant processing. Anything that has to be processed through credit card with how money is delivered to you. They do not charge success fee, and you can learn more about them at fundable.com. Now, CrowdStreet, the industry most likely to use equity crowdfunding is in real estate. So if you're in real estate, CrowdStreet can work very well for you. They allow you to invest online in commercial real estate. Investors can choose between direct investing, fund investing, and managed investing. And CrowdStreet boasts over 101,000 investors and over 260 commercial real estate developers. So I actually had a representative from, I think it was CrowdStreet on my podcast that talked about this, a brilliant way. So if you want to make money on commercial real estate, right? But you don't want to have the money or know how to go buy a commercial real estate, you could get it with CrowdStreet and put a little bit of money in and get a reward when that property is actually sold. So it allows you to get into commercial real estate without a big out-of-pocket spend and still be able to get a rate of return. And if you sell commercial real estate or have commercial real estate, well, it's a way for you to get other people to invest in yours or other people to give you the money you need to invest in other commercial real estate as well. Pretty cool. Direct investing is varied minimum investment amounts. The minimum for funds is $25,000. So you have to have 25 grand to get in. The minimum for managed investing is $250,000. The difference, right, is managed investing is done through managed people, like managed financial institutions that manage money for a living. So for example, there are hedge funds that manage other people's money, and their job is to invest that money into places like other businesses, right? That's what they do. So that's managed investing. A hedge fund is managing other people's money and using it to invest. Hence, this platform is more for professional investors, and you can get it. You can learn more at crowdstreet.com. So again, when we talk about managed money, we're talking about large hedge funds, for example, that manage a bunch of people's money and have a bunch more money to put in. And it's also for individual investors, but anybody that's looking to make a return on commercial real estate. It's a pretty cool thing, way to go. And Joey says, give people confidence and reason to invest by numbers. Absolutely, absolutely true. Real Crowd's another real estate investing platform via equity crowdfunding. Real Crowd charges a technology access fee to operating partner for their services. They do not charge investors any upfront fee, ongoing asset management fee, or promote carried interest in their investments. Okay, you can browse offerings before you sign up, and the information includes minimum investment and average returns. So you can see how much return you can potentially get on your real estate, how much you're average getting, and you can also see the minimum investment to get in. This allows for a lot of decision making before you even log in to their site. And Real Crowd offerings are open to accredited investors only. So somebody has to be an accredited investor. So two options here. I'm giving you ways to invest into other real estate, like commercial real estate, and I'm also giving you ways to get money for the purchase of equity or for the purchase of commercial real estate as well. Fundrise is a great starter site for those who want to break into the world of equity crowdfunding. They do not require that you be an accredited investor. The minimum investment is only $500. Okay, and you can go all the way up to $100,000 for the premium account level. So this is a great place if you want to invest into other companies and get a rate of return where you could do so. Fundrise will charge a 0.15% in annual advisory fee for managing the account through the online platform. They do not charge transactional fees, sales commissions, or additional fees for enabling features on the account, like dividend reinvestment or auto invest. So they don't charge you all those extra fees. Now, they'll also charge a 0.85% annual management fee for managing a Fundrise portfolio. They can potentially charge other fees like development, liquidation fees, so look out for that. Dividend earned or net of any fund fees. So remember, Fundrise, not just in real estate, they're another way that you can either use their platform to get money and raise money for your business, or invest into other privately owned companies. So We Funder is another platform. Investors can put money into all sorts of startup ventures. These include neighborhood businesses like restaurants and what seems impossible like flying cars. Pretty cool, right? So again, you can put your own concept up, raise money for your own business, or you can invest in other people's businesses through WeFunder as well. I mean, if you can invest in flying cars, well, Uber's putting a bunch of money in, so you might as well check it out. There's a lot of cool stuff on their site, wefunder.com. Peer Realty, for another equity crowdfunding site for real estate, try them. You can invest as little as $5,000, and they engage in pre-funding. The platform actually funds the projects first, and the developer gets the money fast, usually within days. Then the project's open from investment, and this transfers risk from the investor to the platform. So a really easy way if you want to invest in commercial real estate or you want to get money for commercial real estate, Peer Realty is a really cool way to do that. Seed Invest, to invest in startups, check out Seed Invest. The startup ventures and only accept about 1% of all the startups that apply with them. You can invest as little as $500. Current live startups have raised from $32,000 to millions of dollars. So remember, Seed Invest works with startups. So they're one that you could put your startup business with, your concept with, and raise money for your business. But don't forget, there's two angles here. You could earn a rate of return on your money by investing into other startups through these platforms, or you could have the startup or business you want to raise money for, and you could be on here raising from $32,000 to millions of dollars on that platform. So multiple options there. Okay, Chili says great platforms for new investors. Want some real estate exposure? Yes, I agree. Again, a lot of platforms here, some specific for real estate, some are open to any type of business, and some have restrictions on industry type, as we talk about as well. Now, if you want to gauge investor interest before you even start, then local stake may be the way to go. They can benchmark your financial projects versus projections versus industry data. Local stake will also perform background checks and a compliance review, and you can raise up to $5 million with them through localstake.com. So they work with a lot of different industries, not just real estate, and can work for you even on the startup front. Now, EquityNet, much like Local Stake, EquityNet is also data-driven. They publish your business's profile and optimize your business plan. You could browse investors, you could share your plan and connect with them, and you could check their proprietary stats to determine if your business has a good chance of even succeeding on equity fundraising. So again, they have a lot of data that will help you succeed with raising money for your business, and you can learn more at equitynet.com. Now, CircleUp, if your business sells consumer brands, then give CircleUp a try. They collect billions of data points on over 1 million companies across North America. They use machine learning to evaluate companies in a more scalable and fair way than traditional systems. And this helps turn fundraising into who you know to what you have to offer. So again, they're using a lot of data to be able to show their investors that this investment makes a lot of sense. So CircleUp is a great way to go if you have a company that's interested in getting money as well. So a lot of cool options there, okay? And local state compliance, yes. Okay, so recap. Equity crowdfunding involves calling on a crowd to invest in your project. Rather than pre-selling your products, you're selling pieces of your business or equity stake or stock. The industry most likely to use equity crowdfunding is real estate. There's a lot of very specific real estate platforms that we talked about. And there's a lot of industries that might not do as well, but then there's a lot of them that can do well, even as a startup. And we talked about a lot of those platforms. Fees and investments wildly vary. So you need to check these out before you actually decide to invest. And of course, if we can ever help you with getting money for your business, let us know. We don't deal with equity crowdfunding. We're not going to help you in that area. I've given you all the information here for you to take steps to succeed there. But if you're looking for more of the debt financing, loans, credit lines, business credit, we can help you with that. We never charge you fees to get any kind of loan or credit line. We even negotiate with the lenders to get you lower fees than what you'll probably get on your own. So all you have to do is give us a call at 877-600-2487. You can grab our free guide on 27 ways to get cash for your business at creditsuite.com/live-27, or give us a ring, 877-600-2487 to talk more. You get a free consultation with us. We'll help you get your business credit reports for free. We'll help do a funding assessment to see how fundable your business is. We'll even tell you all the loans and credit lines you can get now, and you can do that two ways. Give us a ring at 877-600-2487 or get approved at creditsuite.com/get funding. Now, you also want to check out our other social channels if you got value from this. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time on Facebook, Periscope, and YouTube. And we have daily tips on our Instagram feed, on our Twitter feed. And we have a podcast you can listen to on the go. You can even check us out on Instagram. And all those social links are at the top right of our page up here at CreditSuite.com. So if you got value from this, do me a favor, hit the like button, hit the love button, share this to others so they can benefit. And also on top of that, make sure that if you're on YouTube that you click to be notified when you subscribe, when we go live, and we'll tell you when we go live. And you get all kinds of valuable information like this multiple times every week. Thanks everybody for tuning in. Thanks for the comments. Thanks for the engagement. Thanks, Chili, especially. I got a ton of comments from you today. I appreciate your engagement. And I look forward to seeing you tomorrow at 1 o'clock Eastern, where we talk about more cool ways to get money for your business. Thanks, everybody. Have a great day.